Okay, welcome grade 9s. So today I will be discussing credit transactions. Now, previously from this year and in grade 8, okay, we dealt with cash transactions, okay? Cash coming into the business and cash coming out of the business. Now, cash would come in when we were receiving money, and we would record this in a CRJ, and then cash going out would be the CPJ, and that is when we were making various payments. Now, when we're going to focus a lot about the money coming in for the time being, and one of our main sources of income was sales, okay? And this is when we would sell trading stock, and the money would come into the business and the trading stock would leave. Now, this sales, we specifically knew it to be cash sales, meaning that we would sell the trading stock, but the customer would have to give us the cash immediately. But if you think of people, not everyone has cash on hand all the time for whatever reason. Some people might not have a large enough salary that they can have cash on hand up until right till the end of the month, okay? So cash sales is very limiting, okay? And no business would just want to sell with cash or to people who have cash, because out of an entire population, if I had a group of 10 people, maybe only 2 people, okay, had cash. So does that mean that you're just not going to allow the other 8 people to buy from you? So we have to accommodate those 8 people. And by accommodating those people, we are able to increase our sales. So I've made a few notes here. And I'm just saying there, imagine a business only sold to people who have cash. So here's a little man and he's got money. And then I ask, would they make a large amount of sales? No, okay? And that's because, and like I said earlier on, it's because many salary and wage earners, okay, they don't have sufficient cash available to buy goods, okay? So what does this mean then? And what can we offer to those people who don't have cash? Well, it is the option of selling goods on credit over here. So this is what we would do. Now, we have to discuss what it actually means to sell goods on credit. So when we sell on credit, it means that we allow the customer to take the goods right now. So a customer comes into our shop and wants to buy this pen, but they don't have any money. So they are able to take the pen home. The trading stock leaves the business, but we don't receive any cash right now, okay? So what we then expect from them is for them to pay us back later, okay? Often we give our customers between 30 to 60 days to pay us back, okay? And that's what we expect from them. Now, it says, if the customer takes the goods without paying for them, it is not theft, okay? But what is important is that now, because they've taken our trading stock, it's gone, okay? Let's say this pen costs 10 Rand. The trading stock leaves. We have to remember that they now owe us that 10 Rand. They are in debt to the business. Why? Because they owe us money for the stock that they took. Okay, so these credit customers have a specific name, and because they are in debt to us, we call them debtors. Okay, not debitors, debtors. Okay, now this debt, I say it is an asset to the business, because remember, assets are all items of value, okay? And because these people I like to say they're walking around money because we know that they owe us this money, and money to us is an item of value, okay? So because they owe us this money and we have a legal right to the money, it is then an asset because we know that we will eventually get the money from them. Okay, and that's why debtors are seen as an asset, because we know that eventually we will receive cash from them. And remember, cash is always an asset. Okay, now, this source document, okay, we need to remember that when we sell on credit, it is still considered a sale, okay? Why is it still considered a sale? Because we will eventually receive the money. Okay, receive the money. And also, why are we receiving this money? Because they took stock. Okay, so now, what's very important is that the business is not receiving any cash. So when we go back and we talk about this cash sales, what I spoke about before, okay, these cash sales, where we would record it was a CRJ, and if you all remember, the source document was the cash register roll, okay? But now, we are doing credit sales. Okay, we are selling on credit, which means we're not receiving any cash whatsoever. So we can't at all, we cannot use the CRR because we're not getting any cash. Okay, there's no cash. So I'm sure most of you will remember that whenever we see something is bought on credit, okay, the source document we use is always the invoice, okay? So this is what I've said here. It says, we, the business, is not receiving any cash. Therefore, the cash register roll cannot be used, okay? Why? Because it's not going in the CRJ. Why can't it go into the CRJ? Because we're not receiving any cash. They're literally taking our stock, taking it home with them, and we're hoping and praying that they're going to come pay us back at a later date. So, like I said here, the source document is always the invoice. Now we have to decide, okay, is it the duplicate invoice or is it the original invoice? Okay, so I've got a nice easy way to go through this. So when we talk about duplicates and originals, okay, so we've got an original of a source document and we've got a duplicate, okay? What you always need to remember is that the customer, okay, the customer always gets the original. And why? Because the customers deserve the best. They don't want a duplicate. They want an original document, okay? So that means then the business, okay, the business will always keep the duplicate, okay? So in this case, we must remember that we are the business in this case because we are selling on credit to the debtor, okay? So that means we then use the duplicate invoice. So over there, I did say that the source document is the duplicate invoice. Okay, and I just re-explained here about when an invoice is used and how the customer always gets the original. Okay, then we've got an example of an invoice. So generally, we can sometimes make you fill this out, but it doesn't happen often. So the description, let's say it would be netball balls, okay, and we're going to buy 2. This says quantity, okay. Then the unit price is how much one of the balls cost. So let's say the ball costs 250 Rand, which means the total amount, okay, you have to times, because we're going to say 250 Rand times by 2, so that is 500 Rand, okay. Then let's say I buy a netball hoop, and I buy also 2 of them, and they are 1,000 Rand each. That then is 2,000 Rand. So you would keep listing the items under description, the quantity, how much it costs for one, okay, and then this is the total. You would then add the amount down to get the subtotal, which is 2,500 Rand. Sometimes we add tax. This is more grade 11 work, okay, and we would get the total, which is 2,500 Rand. This is what we are selling. So the specific debtor would then owe us this 2,500 Rand. Okay, so that is just an example of an invoice, nice and simple. And I'm sure many of you have seen it before. Okay, now, remember, I'm going to keep going back to this, okay? With cash sales, we always record it in a CRJ. But now, we're selling on credit, which means we're not receiving any cash. So we can't put it in a CRJ, which means I'm now going to introduce to you a whole new journal, which we use for when we sell on credit. Now, if we keep thinking back to what I was saying, the people we sell on credit to are our debtors, hence why the new journal is called the Debtors Journal. Okay, now, very important, this is the journal we use to record all credit sales. So whenever we sell on credit, remember when we sell on credit, it means they're going to buy now and they're going to pay us back later, okay? And again, I'm just repeating myself, this credit sales cannot go into the CRJ because we're not receiving any money. They are in debt to us, okay? Again, the source document is the duplicate invoice. Okay, now here is the format of the DJ. Okay, you would put in the name of the business, the month and the year, and then obviously give your DJ a number. Then we have a document column, a day column, details, folio, a sales column, and a cost of sales column. This makes sense, okay? Remember, these accounts are specifically, you saw it in the CRJ, affected whenever we sell, okay? Very, very important. Now, in the document column, it says, but I'll just explain, this is where we will put the invoice number, okay? And they must follow in numerical order. So, for example, number 11, okay? Then the next one would be number 12, okay? Then the day column is the date on which the transaction or the sale actually happened. So, for example, let's say this one happened on the 4th, okay? So we'll place the date, and this is always given. Then the details column is where we're going to actually put the debtor's name. So, for example, let's say the person who bought on credit from us is in Grobler. She is our debtor, okay? So she took trading stock and now she owes us money. Then we have this folio column. It's very, very, very important, okay? This is where we put the debtor's ledger number. Now, you're not going to be very clear on that right now, but for now, we'll just label her DL1, okay? Now, because a business has so many debtors, if you can think of Edgar's, for example, they have hundreds and thousands of debtors. And in order for us to keep track, okay, to keep track of those debtors, we need to have a system in place, okay? So I'm just going to write here. To keep track of debtors, okay? So again, like I was saying, imagine Edgar's. They have hundreds and thousands of debtors, and they need to be able to know, okay, what each debtor owes them at a certain date. Okay, so for example, when I go to Edgar's and I say, okay, please will you let me know what my account is on, they quickly type my name into the computer system and they're able to pick up that Nicole Grobler owes 500 Rand. Okay, now the way that they keep track of these debtors is using what I call these little books, okay? And each debtor will get their own book, and in that book, we will keep track of the debtor's individual debt. Now, we don't call it a book. We actually call it the ledger, which is the subsidiary ledger. And that subsidiary ledger is, sorry about that, that subsidiary ledger is where we're going to keep track of the individual debt, okay? So it is vital that we keep this up to date. Okay, so whenever the debtor buys from us, okay, we will go straight into his book and update the ledger so that we know on a daily basis what this debtor owes us, okay? But we're not going to go through that just yet. So always we will know that if we want to know N. Grobler's debt, we will go look for DL1 and we will pull out that specific book and we can see, okay, N. Grobler owes us 500 Rand. Then we could have another debtor, for example, let's say on the 6th, and S. Low comes and buys from us. S. Low might be DL8. Then we would go find debtor's ledger number 8, and we'd be able to see, okay, S. Low owes us 800 Rand, and now she's buying more, etc. Okay, so I did make a little note here about a debtor's ledger, and I did say that it is like a little book we have for each debtor to keep track of their individual debts. And it's so that we know what each of them owe us. But I say, don't worry about this just yet. We will get to that. We're just focusing on the journal. So for now, all that you need to know is each debtor has their own little ledger where we keep track of their debt. Then, the next two columns are vital because we have a sales column and we have a cost of sales column. Now remember, from normal cash sales, sales is always at selling price. Okay, that's the amount that we sell it for. And cost of sales is always at cost price. Okay, so for example, let's say that N. Grobler bought goods for 1,000 Rand. And then the cost price of those goods were 500 Rand. Okay, and let's say S. Low came and purchased goods for 800 Rand, and the cost of sales amount was 400 Rand. We need to look at this and we need to remind ourselves that cost of sales is the cost price. It's what we purchase the goods for. What's super important for us is this sales column. And why it's important is because this is what they owe us, okay? If N Crawler only paid me 500 Rand, I wouldn't be upset because the stock, we sold it for 1,000 Rand. So they have to pay us back the sales amounts. That is very, very important. Okay, so I just speak more about the sales column, cost of sales. I put in those important formulas. Please, it's vital that you remember those. Okay, and then I'm actually going to skip past this activity and I'm going to do example 2 with you. So it says, complete the debtors journal for low traders, okay, for April 2020. Markup is 100% on cost. So first thing we need to do is we need to go put in the heading of the DJ. So it is the Debtors Journal of Low Traders. Okay, and it's for April 2020, and it is DJ January, February, March, April, DJ4. Just fix that there. Okay, so what I always do is remind myself, okay, sales is always at selling price because that's what we sell it for, and cost of sales is always at cost price. Okay, remember, only credit sales can go in here. Credit sales only. If they are cash sales, you know that they have to go into the CRJ. So it says, on the 6th, we sold goods on credit. And you need to start highlighting those words. You know, okay, if we sold on credit, it has to go to the DJ. Okay, and we sold to M. Thomas, who is DL1, so that's his ledger number, his little book number, for 1,000 Rand, and the cost price is 500. Issued invoice number 1. Okay, so let's put it in. The document number is number 01 from there. So we've used that information. The day is the 6th. We've used that information. Then the details, remember, is always the debtor's name. So in this case, the debtor's name is M. Thomas, and we can tick that information off. Then the folio is his little book number, and he happens to be debtor's ledger number 1. Doesn't necessarily mean it will always start at DL1. It just happens to be that M. Thomas was the first ever debtor that purchased from us. Okay, now it says we sold it for 1,000 Rand and the cost price is 500. So do you all agree that the CP is 500 and we sold it for 1,000, which means this is the selling price? So let's put the sales amount in. It was 1,000 Rand and then 500 Rand into cost of sales. And that is that. Now, what we're not doing is immediately we would go record this in his ledger, but we're not doing that. So it's quite simple. Then on the 7th, merchandise, which is another word for trading stock, was sold on account. Okay, this is important. This is another way of saying on credit. Okay, I'm sure maybe lots of you have heard your parents go to certain shops and say, can I buy this on account? That means they're buying on credit, which means they're not actually paying actual cash. They will take the goods now and pay for them later. So we sold to O Pace, who is DL3, for 1,600 Rand. That's what we sold it to him for. So do you all agree that this 1,600 Rand is the SP, the selling price? Okay. So hopefully some of you are thinking, oof, I'm going to have to be able to work out the cost price. So the document number, remember, they have to go in numerical order, is number 2. The day is the 7th. Okay. I got this number 2 because they go in numerical order. They didn't have to tell me that information. Then 7th we've used. Who did we sell to? Pace. Okay. And his little book number is DL3. So we've used that information. Then we sold it to him for 1,600 Rand. That's the selling price. So we can put it 1,600 Rand into sales. And then we need to work out the cost price. Now remember, the cost price formula equals, cost price equals selling price times by 100 over 100 plus markup. So our selling price is 1,600 times by 100 over 100 plus our markup is 100. Remember, no percent sign. And then I know it's quite simple. Most of you can do this in your head, but it would be if it wasn't 100, you must know this formula. So we say 1,600 times by 100 over 100 plus 100, and we get there 800 Rand. That is the cost price of the goods that we sold. Okay, but we are remembering that Pace owes us 1,600 Rand, not the 800. He owes us the full 1,600 Rand. Okay, then the next one, the 20th. We sold trading stock. Okay, so we're selling trading stock. Okay, with a cost price of 800. So here they're trying to trick us. Okay, so they have given us the CP. Okay, they have given us the cost price, and we are selling to J. Swart, whose ledger is DL2. Okay, so let's put it in. The document is the 3rd. Okay, the day is the 20th. There's the 20th we've used. And we are selling to J. Swart, so we can write that name down. J. Swart. And his ledger is DL2. Okay, now they have given us the cost price. Remember, sales is at selling price, cost of sales is at cost price. So we have to put the 800 Rand in this block, okay, in the cost price. Now we have to work out the selling price. It's obviously easy. They happen to be the same figures, but in case you didn't know, in order to work it out, the formula is selling price equals cost price times by 100 plus markup over 100. So I'll just do it anyways, just to prove. So the cost price is 800 Rand times by 100 plus 100 over 100. 800 times by 100 plus 100 over 100. And indeed, we get an amount of 1,600 Rand. Okay, so that is our selling price. That's how much J. Swart owes us. Okay, how easy is this? And the last one, number 28. Okay, credit sales, so we know it has to go in the DJ, to M. Bell, which is DL6, amounted to 18,000 Rand. Hopefully you can all agree that this is the sale amount. Therefore, this is the SP. So you will have to work out the CP. So the document is number 4. Okay. The day is the 28th. The 28th, we are selling to M. Bell. And her ledger number is DL6. And we sold it to her for 18,000 Rand. Now we need to work out the cost price. So we take 18,000 times by 100 over 100 plus the markup. And we get 9,000 Rand. And that is you done. Now, obviously, with all journals, we know we have to total the columns. So we'll total these two columns quickly. That is the total credit sales. Okay, so that's how much we sold on credit. Now imagine we didn't offer credit sales. That 22,200 Rand we would never ever receive. We might not be receiving it right now, but we know that we will receive this amount in the future, and that means everything. And lastly, the cost of sales column. And that equals 11,100 Rand. Okay. I hope that makes a lot of sense to all of you, and good luck for the rest of them. I'll be posting another tutorial like this a bit later on during the week.